Communications, and I'm joined today by Mr. Elliot Harris, the UN Chief Economist and Assistant Secretary General for Economic Development, and Mr. Hamid Rashid, the lead author of the report and Chief of Global Economic Monitoring in the Department of Economic and Social Affairs. Mr. Harris will present a brief introduction, and then Mr. Rashid will present the key findings of the report, and then they'll take your questions. So we'll start with Mr. Elliot Harris. The floor is yours.
Thank you very much, Martina. Good morning, ladies and gentlemen. Thanks for joining us. As Martina said, I'll present a brief overview focusing the world economy has suffered the worst crisis in the last 90 years. We've had an unprecedented economic contraction, which we estimate to be on the order of 4.3% in 2020. This contraction was more than 3 times as large as the decline that we experienced in the last global crisis in 2009. We project a modest recovery of 7% in 2021, but that would, of course, only just barely offset the losses that we experienced in 2020. This has been and still is a universal crisis. It affects all individuals, it affects all countries. But it does not affect us all equally. And I think that is one of the key messages that we draw from the analysis, with the major implications for the policy going forward. Developing countries suffered an estimated 5.6% downturn in 2020, with certain sectors being particularly heavily affected by the lockdowns: tourism and travel, hospitality, retail. This downturn prompted a very rapid and very large and fiscal stimulus. But unfortunately, the uncertain path of the pandemic in the year and into 2021 does raise questions about the path and scale of our recovery. Developing countries also suffered an unprecedented economic downturn, which averages about 2.5% in 2020. They faced a significant decline in overall domestic demand and in exports. But they've also had a tremendous loss of progress in terms of combating poverty and with regard to many of the other SDGs. And they face large fiscal deficits and high levels of public debt, which will constrain their ability to continue sustainable development in the future. The most visible signs, of course, have been the massive losses. We estimate that 2.7 billion workers worldwide have been affected either directly or indirectly by the economic crisis. And it's estimated that the equivalent of 420 million jobs were lost in the second and third quarters of 2020 alone. But here again, the pandemic's impact has been very uneven. Workers at the bottom of the skills and the income scale have been particularly affected, especially those who have been unable to work remotely. Moreover, women have been disproportionately and adversely affected as well, since they make up the majority of employment in the sectors that have been most directly constrained by the economic downturns. This asymmetric employment effect is worsening the already high levels of income and wealth inequality in many developed and developing countries, and it is one of the most visible and most damaging features of the pandemic to date. And it is one of the areas where the longer-term impacts are likely to persist going forward. The crisis has affected the pace of digitalization of the economies, as well as the amount of automation that is taking place in response to the lockdowns. And this means that many of the millions of jobs that were lost in 2020 will not come back at all, or may come back in a different form. Unemployment rates are likely to remain elevated for the near future. And equally important, productivity gains may be modest, given the fact that investment has suffered quite considerably due to the downturn. Another area of major impact has been global trade. The pandemic delivered a large shock to global trade, disrupting cross-border travel and international production networks. We do see a recovery in trade flows having started, but again, the outlook is marred by the uncertainty about the future spread of the virus. What's also important is that this pandemic has accelerated several ongoing structural shifts in global trade. Digitalization has become increasingly important, as has the share of services in global trade, And global value chains are being reconfigured to reduce their vulnerability to the kind of shocks that we've just experienced. All of them affect growth costs, that mass sustainability. It's important here that international will be successfully addressed if we can return to the sort of global partnerships and the spirit of that has guided development over the last decades.
Excuse me, Mr. Harris. I apologize. We're experiencing some issues with your connection. Would you mind trying to turn off your camera so that we can at least get the audio to come through? Thank you.
Okay. Hello, can you hear me?
Yes, we can hear you.
Okay. I will the job losses translated into terms of combating poverty. We estimate that in 2020 alone, 131 million new people have fallen back into deep poverty. And by 2030, unless there is a major change in the trajectory, almost 800 million people will remain trapped in extreme poverty. But this crisis has also affected many other SDGs. Hunger is again on the rise. Schooling achievement has been greatly affected by the school shutdowns, of course. And we also have seen other aspects of the health agenda, as well as the climate agenda. All of these various SDGs have been affected by the inabilities of government to focus on that trajectory. I want to state, however, here that this is not something that is all the fault of the crisis. We were off track with regard to the SDGs well before the onset of COVID-19. The crisis has prompted an unprecedented fiscal and monetary response, but once again, although it totaled some $12.7 trillion, the stimulus packages were not evenly distributed around the world. The LDCs, for example, the least developed countries, only accounted for 0.14% of the total stimulus packages, and many countries, including the LDCs, were severely constrained by their lack of fiscal space, and they already had elements of debt which made it impossible for them to mobilize significant stimulus packages. This, of course, compromises their ability to converge on a path of vigorous recovery and return to the path of growth and sustainable development. I'd like to highlight two further aspects, two further conclusions here. One is that there has been a tremendous uptick in the amount, in the level of public debt as a result of this crisis. It's increased by a total of some 15% worldwide in the course of last year. Now, this was necessary in many respects for some countries to be able to make any kind of stimulus response at all, but does represent a claim on the future. And given the fact that the focus of most of the stimulus measures were on preserving income and preserving jobs, and less on actual investment in productive infrastructure for future growth, we have to be very cautious not to overly burden future generations with unsustainable levels of debt. The second concern is that because of the debt in particular, many countries will be facing severe pressure in the near future to consolidate their fiscal accounts, to reduce their borrowing so as to prevent additional debt or to limit it. But premature austerity would derail the recovery effort that we saw in the last crisis, and we will have to work very closely together to avoid that particular situation. We have to emphasize in concluding that the impact of this crisis on our emphasis for sustainable development has been very, very negative. But again, without sustainable development, there's no chance of us recovering successfully from this crisis. And so consequently, a robust and resilient recovery will require that we strengthen our public finances. We have to improve the sustainability of our debt profiles. But above all, we have to focus on combating the inequality that's been exacerbated by the impact of the crisis. And that will require, among other things, expanding social protection, which must be a priority for all governments. And we have to preserve the momentum or build it back up again in terms of environmental sustainability and, in particular, the effort to combat climate change. All of this has to be couched within a strong recommitment to a reinvigorated and revitalized multilateral system. And we think that that would be the starting point for a successful global effort to recover from the crisis. Thank you very much. And I'll hand it over now to Martina.
Thank you so much, Elliot. And we could hear you much better without the video. So probably best to keep it off when you're answering questions later. Okay. Now over to Hamid with some slides to go over the key findings.
Okay, can you see my slides?
Yes.
Thank you, Martina, and thank you, AG Harris. So I would basically just share some of the highlights of the report, which has already been addressed by AG Harris. And this is just to give you some of the key messages from the report. And as we can see that this has been the most severe economic crisis since the Great Depression more than 90 years ago. And almost all regions of the world have been affected, but some regions have been more affected than others. In particular, we see that South Asian, Latin American country and the Caribbean have been badly affected by the crisis. And also among the developed countries, we see European economies also were significantly affected by the pandemic and the lockdown measures that affected economic activities during the second and third quarter of the year. So as a direct consequence of the pandemic, we see a massive hit on global employment, and over 2.7 billion people were affected by the lockdown measures and other sort of restrictions on economic activities, and that had an economic-wide effect. And if we look at it globally, some of the countries, especially developing countries, saw their unemployment rate increase to double-digit numbers. In some cases, even in the low 20s, unemployment rate in South Africa and other countries saw massive employment shocks. Even in the developed countries, we saw massive increases in unemployment very quickly. Of course, some of them stabilized and came down, but this is an impact that would have huge consequences for income distribution, as A.H. Harris explained, that it didn't affect everyone equally. Those who were at the bottom of the skill distribution and income distribution, they took the hardest hit in most cases because they were not able to work remotely and they were disproportionately exposed to the risk of the pandemic. We expect some rebound of the global economy in 2021 by about 4.7%. In normal times, that would be considered a cause for celebration, but actually 4.7% would barely offset the losses that we had in 2020. So in real terms, we would see very, very little recovery in 2021 in terms of, in absolute numbers, in global output. We would see some offsetting effects, but that would not be sufficient to put the world back into the trajectory that we had before the crisis in terms of employment, total employment in the economies. And if you look at the regions of the world, East Asia is the only exception. All other regions of the world saw a contraction, a massive contraction in South Asia and Latin America, as I mentioned early on. Europe also had massive contraction to the tune of about 8% contraction in 2020. But East Asia is the only region that actually had a positive growth rate in 2020. And that is largely because of China's quick rebound in the second and third quarter of the year. Especially in the third quarter, we saw a significant rebound. Among the G20 economies, they G20 accounts for about 20%, 80% of the world economy. Only China had a positive growth rate in 2020. And this is significant because other economies are, some of them took very hard hit, and we still don't see a major pathway to significant recovery for a number of those economies. So what we highlight in the report is that what are the long-term impacts, long-term scars of this effect, this crisis? Short-term impacts are very easy to sort of put down numerically, what we see the numbers, the GDP numbers, employment numbers, but there will be significant long-term impact of the crisis, through poverty channels, through inequality channels, through trade channels. We'd see a significant sort of impact, long-term impact. But most importantly, what we would see is that this crisis would probably depress global investment for the near future. In the near term, if investment remains subdued, that would impact job growth going forward. And we have to keep in mind that more people would enter the workforce or would like to enter the workforce. And if there's not enough job investment in job creation, would definitely see a deceleration in growth going forward. So investment would be critical, but we don't see a recovery of investment as yet, although we see massive recovery in stock markets, but not in real investment. And also another risk that we see is that productivity growth would slow down, although some sectors of the economy, because of digitalization and automation, would see massive increases in productivity, but overall productivity growth would remain subdued. Average productivity growth, and that is again a source of economic growth, long-term economic growth, and I think this should be concerning for all of us. And likewise, labor force participation rate would also remain relatively weak, and that would also affect economic growth, long-term economic growth. And finally, the trade took a huge blow this year in 2020, but trade recovery will be very critical, especially for developing countries who see trade as an engine of growth. But trade is increasingly digitalized, and trade is also has a huge service component, especially even in merchandise trade. We see an increasing role of services, and this is where the developing countries may face some disadvantage, especially if there is a large digital divide. So in order to stimulate trade, developing countries would have to rethink about their trade strategies and how to take advantage of the new opportunities that may emerge. And that would require them to be more flexible, more flexible and nimble global value chains, because global value chains might become shorter to minimize risks from this kind of crisis. So the trade would definitely face some medium to long-term transformation, but this is also probably an opportunity for some countries to take advantage and reconfigure their trade strategies, so that they can use trade as an engine of growth going forward. So Mr. Harris already mentioned about the massive response to the crisis. Crisis response, it was an extraordinary crisis. The responses were equally extraordinary. In terms of size of the stimulus, we saw $12.7 trillion stimulus packages worldwide drawn out, and this is the largest response since the global since the World War II in terms of public response to an economic or political crisis. And in terms of impact, there's been the response to the crisis. Of course, there's a huge disparity among developed and developing countries, and we see the developing countries barely managed to roll out stimulus in terms of the size of the GDP or on a per capita term. I just want to give you an update about this number. On a weighted average basis, LDCs managed to spend about $17 on a per capita basis on their stimulus spending, whereas developed economies spend about $10,000 on a per capita basis. So you're talking about, when we talk about the weighted average, it's about 580 times larger in developed countries compared to the developing countries. If you look at the unweighted average, it's about $240 for every dollar that the LDCs manage to spend on stimulus on a per capita basis. And this is a huge gap, given that the income disparity between the LDCs and the developed countries is only a magnitude of 30. So every developed countries on average earn about 30 times more than the LDCs. And this would this would mean that going forward, given the size of the stimulus and disparity in the sizes of the stimulus, that trajectory of recovery would be different for developed and developing countries. Developing countries might fall behind further, and the income convergence between developed and developing countries can slow down. That means that we might see a growing inequality among countries and between countries. And that is something that we have to keep in mind if we think about a more inclusive and robust recovery. And one sort of a spillover effect of the stimulus measures is that we are seeing a massive asset price bubble, especially stock prices worldwide has significantly increased since the beginning of the crisis. And in most cases, this has outpaced any of the increases that we saw after the global financial crisis. And part of this is because the stimulus money didn't go into either consumption or into investment. They went into savings, which basically allowed the financial sector to take advantage of and bring the money to the financial assets. And that has led to a massive sort of asset price bubble, a financial bubble. And this is a risk we must take into account if we want to have a robust recovery, because if the bubble pops at any time soon, we may see another financial crisis on top of an economic crisis. So we just mentioned that in LDCs, they barely managed to spend, as a percentage of GDP, about roughly 2.5%, whereas in the developed economies, they on average spent a much larger amount in terms of the share of GDP, over almost 16% as a share of GDP. So what the UN will look at also, our report looks into what are the effects on the Sustainable Development Goals that we embraced in 2015. These are global goals, and every country has committed to pursuing those goals. And we see massive sort of shock to global sort of SDGs in terms of poverty reduction, and roughly about 131 million more people will be below poverty this year alone. And by 2030, we may have almost 800 million people living below the poverty line and extreme poverty. And that is quite significant, because our goal in the 2030 agenda is to eradicate extreme poverty. So that goal probably is facing a significant risk unless we turn around and find a way to basically make sure that we have the right kind of job creation and we address inequality head on, because with rising inequality and no investment in job growth, we may see even further increases in poverty. One, of course, concern is that the stimulus mostly have been financed through debt. Public debt has increased significantly worldwide. In some countries, it has been, of course, increases have been much higher than some of the developing countries, partly because some of the countries like the United States or some major European economies like Germany, they were able to borrow significantly because they are reserve currency economies. They're able to borrow in their own currency, and they didn't face the financing constraint that most developing countries faced. But overall, public debt has increased, and that is a concern because there might be a push to reduce public debt through austerity measures. And this would be very, very devastating for recovery, a resilient recovery, because this is the time to make sure that we avoid austerity and take the stimulus and invest in future. And that is investing in real economic activities to create jobs, to create infrastructure, to address the digital divide, to build the trade infrastructure. All of them would have much more longer-term dividends for the global economy. And without that stimulating investments and growth, I think debt would become increasingly unsustainable. And that would be a intergenerational issue, because we might be able to protect our current generation at the expense of the future generations' interest. They might be worse off than us, and that is something that we have to keep in mind, because when you talk about inequality, we also should think about intergenerational inequality. If we leave our future generation worse off, that would be a major concern. So my final slide that I would sort of highlight is that we have a pathway, and the pathway must be pursuing recovery with resilience. Without resilience, we see that it was a health crisis, but it became an economic crisis. in the future, we might have a climate crisis, but it would immediately translate to an economic crisis. So crises will be increasingly interlinked and also mutually reinforcing and probably more frequent. That means we need to think recovery from the lens of through the lens of resilience. And this is critical for us if we want to really put the world on the trajectory of sustainable development. And sustainable development requires resilience, and resilience requires sustainable development. So we have to look at these two dimensions almost like as two sides of the same coin. And we have to basically need comprehensive overhaul of our policies and the policy stances in terms of trade strategies, in terms of our fiscal frameworks at the national level, and how we can pursue more sustainable levels of debt and make sure that debt goes into investments, especially investing in human capital, investing in infrastructure, investing in digital economy, because that's the future, to make sure that we have the right kind of social protection schemes. And one of the things that we argue in the report that social protection can be an automatic stabilizer for people who face a system-wide shock. Their personal savings cannot be sufficient for them to cope with that kind of shock, which is economy-wide. So social protection, we have to rethink about social protection. Only about 50% of the world population has some kind of social protection from the formal sector. In Africa, it's about 80% of the people don't have social protection. That is quite alarming. So we have to think about social protection. But also we make the case that we need to think about climate resilience more seriously, because shocks may come from the climate side more frequently, and this is the time for us to invest in the green economy and to make sure that we invest in sectors of the economy that creates a lot of jobs, but also creates resilience, creates a lot of growth, but also create more safeguards against future shocks. And all of this would require us to rethink and revitalize multilateralism, because some of the crisis has shown that the fragility of the world economy, because our responses at the national level were very, very robust, but international responses have not been adequate in terms of either helping the most vulnerable group of countries, in terms of debt relief or debt restructuring. So we need, and also in terms of even the vaccine rollout or the future to how to deal with the course of the pandemic in the near term. So we need a strong multilateral system, not only in the trade side, but also on the economic side, especially on debt issues, but also on climate resilience, climate adaptation and mitigation, and overall also how to support and how to strengthen social protection schemes worldwide. So this is the key policy message from our side, that we have to rethink and rebuild resilience if we are serious about the recovery. And without resilience, recovery would become very fragile and it would not be sustainable. Thank you, Martina.
Thank you very much. And now the floor is open for questions. If you do have a question for Assistant Secretary General Harris or for Mr. Rashid, please put your name in the chat. And perhaps we'll start with journalists in the room. I think I see Edie Lederer from the AP. Please, you have the floor.
Thank you. Thank you very much on behalf of the United Nations Correspondents Association for doing this briefing. Mr. Harris, I'm sorry that your briefing was pretty choppy, so we missed I missed quite a bit of it. Before I ask my question, would you please make sure that you resend the report and the press release, because I couldn't find it in my email. I have two questions. First, in terms of the 4.7% recovery that you're expecting this year, I assume that it's going to be unevenly divided around the world. And since we know that China's the only country that had positive economic growth in 2020, how much of the 4.7% is going to be China and how much is going to be the rest of the world? And secondly, do you expect the transition from President Trump's former President Trump's economic policies to now President Biden's economic policies and outlook to have any significant difference on the way the global economy recovers? Thank you.
Thank you. Mr. Harris, you want to take that?
Sure, I'll start this. I'm going to try a little bit with the video. If it goes a little weird on the sound, please let me know. I'm going to ask Hamid to give the response to the first part of your question, on the relative share of China in the recovery. When we look at the transition from the one, there are a couple of data which all go well. The first is the commitment to rejoin and to resuscitate, if you will, climate action at the federal level. That opportunity for aid towards green growth, towards renewable energy, and towards green jobs. And
I'm sorry, apologies. The audio is an issue. Thank you.
Okay, it's gone. Okay, is it better now without the video?
Yes, it is. Thank you.
I'll try again. Okay, fine. I'm sorry. I have to look into that as soon as the event is over. No, I was saying, one is the commitment of the Biden administration to rejoin the Paris Agreement and to pursue effective climate action. That opens the door for a lot of investments in the transition to the green economy, renewable energy, the creation of green jobs, and all of that should contribute to the recovery and to a more sustainable pathway for the recovery. The second thing is that, as you well know, in the course of the last 4 years, we've had a lot of upheaval in the global trading system. We've had outright tensions that have turned into what we would call protectionist measures. And we hope that now we can sort of resuscitate the commitment to, as we put it, the multilateral spirit of cooperation. This is going to be particularly important in trade, but it can also help with regard to some of the technological developments that we see happening around the world. We hope that this spirit of multilateralism can be reinvigorated, because we think that that would be an important foundation for the recovery, not only of the big two economies, but of all of the economies, and in particular of the developing countries that still do depend quite heavily on trade. I'll stop there.
Yes, I will just step in terms of, we expect China's growth rate in 2021 to be about 7.2%. And given the size of the Chinese economy, China is the second largest economy in the world, and roughly about 18-19% of the world output is from China. If you do the math, roughly about 1.29, 1.3% of the 4.7% of growth would come from China. That means China will roughly account for about 30% of global growth in 2021. This is not unprecedented, because right after the global financial crisis, China was doing the heavy lifting. When the rest of the world, especially developed economies, particularly Europe, suffered a prolonged slump in 2010-11, China's growth was accounting for about 25% of global growth. So we'd expect China to do much of the work in terms of global recovery, but that recovery would also, China's recovery would also help many countries in Africa and Latin America in terms of China's demand for resources, especially commodities, would rise, and that would also help recovery in Latin America and the Caribbean and also in African countries. So if China is able to achieve that growth rate, this might also be a good news for many developing countries going forward. But roughly, I would say about 1/3 of the global growth in 2021 would come from China, and rest of the world would account for the remaining 2/3. Thank you.
I don't see anybody else in the room, so we'll go to Toby from NHK, who's online.
Hello, thank you very much for the briefing. My questions are, can you just tell us a little bit more about the possibility of a financial crisis on top of an economic crisis, that point specifically with regard to, you said equity markets and also an asset bubble. And the second question is on, does your report take into account monetary various monetary effects? Like, what do you expect in terms of inflation from all of this stimulus and debt? Thank you very much.
Hamid, to you.
Yes, thank you. I think this is very important. If you think about the response, both from the fiscal side and the monetary side, basically on the fiscal side, US, Japan, and Europe, especially Germany, they accounted for roughly about 50% of all stimulus. On the monetary side, also the three central banks, European Central Bank, US Federal Reserve, and Bank of Japan accounted for, the asset purchase was about $7.5 trillion of asset purchases. They accounted for the majority of the asset purchases that allowed a massive infusion of liquidity in the global system. And as we saw that this increases, was supposed to stabilize the economy, which was the primary goal, so that there was no drying up of liquidity. The primary goal, the first order goals were definitely achieved. We avoided the financial crisis right around the time when the pandemic hit the global economy. There was a panic in March and April, and that was averted because central banks responded very quickly and very boldly with the right kind of measures. But the secondary goals of this was also to stimulate investment, so that to prevent bankruptcies and to stimulate investment. There we see a significant slack and significant we don't see the connection between liquidity and investment, and this is what we highlight. In terms of money supply growth, we saw that all the three major economies saw significant increases in money supply. Roughly for the US is about 23%, Euro area 9%, Japan about 8% increase in the money supply. But if we look at investment, which is we define as a gross fixed capital formation, the real investment or physical investment, we saw during the same period in the US, capital formation declined by 7.8%, all the money supply increased by 23%. In Euro area, we saw a decline of investment decline of about 20%. Japan about 7.3%. And these are massive shocks to investment. But this is not exactly surprising, because most of the money that came through stimulus went to the financial markets, because what happened is that the households either were unable to spend the stimulus spending, or the businesses were unable to invest because they were uncertain about the future. But then they had precautionary saving even going further, because many of them saw the stimulus as a one-time support and they couldn't count on it. So the household savings rate went up across major economies. And if you look at the major stock indices, Nikkei 225 increased by about close to 45% in between March and December. Dow Jones and S&P 500 both went up by more than 30%. And if you look at it, put it in context, during the previous 5 years, they increased on average by about below 10%. So massive increases in financial asset prices in the last 10, 11 months. And that is alarming, because that shows a disconnect between the real economic activities and the financial sector activities. And unless we have a significant sort of a break and some sort of measures to prevent further build-up of asset prices, we may not discount the possibility of a financial crisis. And this is critical to ensure recovery, because if we have a financial crisis, that may have further effect on investment going forward. We may see even further fall in investment. So, and that is partly linked to the issues of inflation that you raised, because one expectation is that inflation expectation globally is very low. Some central banks are trying to change their policy stance to have more inflation, even to target average inflation as opposed to a point inflation. And with low inflation, there's another risk there, because this is where the asset prices would remain, or liabilities would remain high related to the economic activities, because if with low inflation means that there's no inflation tax on either on the liability side or on the asset side. But and if growth remains very low, debt to GDP ratios or debt to revenue ratios for firms would remain very high. And that may lead to another kind of crisis because in many cases, corporate bankruptcies may become more likely, or in case of countries, sovereign debt crisis may become more likely. So low inflation in normal times can be a very good thing, but we can see that low inflation can be very risky in the current juncture. And if central banks all of a sudden see some signs of inflation, if they start raising interest rates, and then we can see we would probably see a financial panic, and that may lead to another kind of financial crisis. So we have to very carefully balance going forward in terms of policy responses. So abrupt increases in interest rates would definitely lead to a financial crisis that would be very costly. So a gradual normalization of monetary policy is very critical, while making sure that fiscal policy, fiscal stimulus goes into investment would be equally important. Thank you.
Thank you. And I don't see any further questions, but just want to check if Assistant Secretary General Harris would like to add anything before we close.
Just one little remark, I think, which is to stress the fact that we cannot expect to have a strong and resilient recovery with policies as usual. We made that mistake over the past 5 years. Governments have not made the fundamental changes in policies that would be needed to truly launch and maintain the momentum of sustainable development. But now we're facing an even larger challenge of recovering towards sustainable development and accelerating our speed. And for that, we do need to have a fundamental change in policies. We have to address the inequalities that have been plaguing us. We have to deal with that debt crisis, and that requires a multilateral response. And it is very urgent. And we have to also pay attention to the climate agenda, because we have not done as much as we should have done over the past 5 years, and we are falling behind. So with that, I'd like to close on that note, that there is a lot that we do need to do. We know what it is. We have to go out and do it, and that requires political will. Thank you.
Thank you so much. And with this, we'll close. And I'd like to really thank our speakers, Mr. Hamid Rashid, Mr. Elliot Harris, and thank you all of you for your interest. The report is online, of course. And thanks again. Bye-bye.
Thank you. Bye. Thank you.